All right, Paul, great to have you here. Looking to do a deeper dive into stablecoins, plasma, the intersection with traditional finance. I mean, maybe starting really broad. Why are stablecoins becoming part of the conversation? Why is pretty much every single boardroom talking about stablecoins today?
Yeah, it's interesting how recent of a change that is really. I mean, if you look how meteoric kind of the growth of stablecoins has been, it's kind of staggering. Where it's extremely underrated how kind of recent of a phenomenon kind of stablecoins at scale really are. I mean, really pre 2020, 2021, stablecoins basically didn't matter at any meaningful scale. And that very rapidly changed, obviously. And I think that is kind of a really interesting area to work in, obviously, because it's so kind of a couple of years of really kind of an entire category of kind of product and use case, which is basically blockchain-based digital money, going from not existing to then being hundreds of billions of dollars and then doing trillions of dollars in actual kind of payment flow. And so it's really staggering. And I think that is combined with then kind of all of the macro tailwinds, obviously. I mean, you have the Genius Act and kind of increasingly just regulated frameworks for how to interact with and transact with stablecoins. You have MiCA in the EU. And so I think every regulator is also kind of coming to grips with the reality of stablecoins being a massive thing at scale. And I think that is incredibly positive. And I mean, it's obviously kind of the mission I chose to dedicate my life to. And I mean, to an extent, so did you, right? And I mean, not only stablecoins, but also stablecoins.
Yeah.
And so no, it's been a really interesting couple of years in the space.
Yeah. So you speak a little bit about mission. How did you get into the space? Tell me a little bit about you. Who is
sure.
Paul?
Yeah. It's a long story. Really short version. I mean, I've always been in and around crypto. Used to play poker way back in the day. Kind of sharper, more visionary friends than me dragged me into crypto from poker. Kind of grew up in the very early Ethereum DeFi days. Founded a different company. Worked at Deribit, the exchange that Coinbase then acquired, and then kind of by happenstance ended up doing plasma now.
Excellent. And I think you kind of alluded to the kind of step function that we've seen over the last few years. I mean, zerohash is a great example of that. We founded the company that crypto is a technology versus an asset class in and of itself, but it is also, fundamentally an asset class in the sense of the underlying assets such as Bitcoin, Ethereum, and then obviously stable coins as well. And we've rebranded over the years from calling ourselves just a pure play crypto or cryptography technology company to making it a little bit more accessible with, hey, we do crypto, we do tokenization, we do stable coins as well. But there clearly has been, and we looked at it, I mean, if you looked at 2020, less than 5% of our volume was stable coins. It's now well over 50% of our entire volume is stable coins. What has caused that step function in your perspective? Is it just the regulatory clarity that's been provided with MiCA and Genius and other frameworks around the world? What has shifted?
I think you do have these kind of network effect tipping points in this, where a stablecoin that only the very close-knit crypto community that's probably made up of a couple thousand people kind of truly accept as basically as cash equivalent. I don't think that is worth a lot on the global scale. And so I think really what has changed is really the proliferation of stablecoins really being used in commerce. And by their nature, stablecoins are the biggest kind of network effect business there is, right? Because they don't have value in isolation as a product. They only have value insofar as they kind of unilaterally and universally accepted as tender for something. And I think that's really the big thing that has changed by now. You can pay with stablecoins in a lot of places, and you have good liquidity and on-off ramps in most jurisdictions. And I mean, zerohash obviously is an example of kind of a technology that's enabling that. And I think that has led to the step function of stablecoins don't matter, don't exist, to they're now half of your volume.
Yeah, I think we always talk about the network effects of just the sheer accessibility of
Yeah.
of stablecoins, whether or not people know it through what I would call like a primary account.
Yeah.
So effectively now, anyone with a PayPal account, anyone with a Cash App account, anyone with a Revolut account, anyone with a Nubank account can access stablecoins instantly, which I think is incredibly powerful. You mentioned the use cases, and obviously Zero Hash powers a number of use cases, whether it be, for example, account funding, tokenization payment rails, payments with stablecoins, payouts with stablecoins, B2B remittance flows.
Yeah.
What are the use cases that particularly interest you or excite you, and particularly around Plasma as a chain for those use cases? Can you help unpack that a little bit?
Sure. I think the most interesting use case is where stablecoins basically act as a kind of pseudo USD bank account.
Mhm.
And I think almost by definition, I don't think the most interesting stablecoin use case is someone sending money domestically in the US.
Mhm.
I think that's mostly a solved issue, right? I mean, banks are mostly functional and are kind of good enough. I don't think you have this kind of step function unlock of like, I can send money to my aunt in Los Angeles now, and it's so much faster and so much cheaper. I don't think that exists. I think it's really basically any other use case. And really the interesting thing that we've seen and kind of having spent a lot of time in places where really access to stable currency and specifically obviously to USD is a genuine challenge for very normal everyday people, where stablecoins are just replacing a bank account and are just used for both saving and kind of wealth building, but then obviously also for spending and for remittance flow, as you mentioned, kind of true payment use cases. I think that is incredibly interesting, and I think that is. I don't think anyone has really figured out how to productize stablecoins on a kind of global scale.
Yeah. So I think sometimes we draw a distinction between money at rest, money in motion. Your money at rest is effectively where the dollar or tokenized representation dollar of the dollar is effectively at rest. It's stopped. Then money in motion is where it moves in between. And a lot of our businesses around transactional throughput. We focus a lot more on TPV, total process volume, whereas a lot of people in stablecoins obviously talk about effectively assets under custody.
Yeah.
If you look at Circle's financials, or if you look at what Tether speaks about, a lot of it is, I think, historically been about that AUC, how much is at rest. Can you maybe unpack a little bit more about why it's important for people around the world to have access to tokenized dollars, and why in particular, for example, on a at rest or in motion, why on the Plasma chain it unlocks additional use cases and functionality like you alluded to?
Sure. I think you need both, right, for a functioning system where money needs to both be highly usable at rest, but then also like be in a position of really high velocity in a very kind of cheap and easy way. So I think both massively matters. And I think really the interesting, like, I mean, given you asked like what is the real value of having basically a global USD bank account?
Yeah.
I think that question is a really interesting one because it very highly depends on like the jurisdiction you're talking about, right? Because there's a lot of jurisdictions where you do have challenges with volatile currencies and you just can't rely on kind of existing infrastructure to solve that because the incentives really aren't there. And I think that is really where the biggest kind of step function unlock is, right? If you look at Turkey, who've had historical volatility on lira, and you look at South Africa, and you look at a lot of those places where you just have people who do commerce and people who earn a living and who don't want to depend on their local currency to save and to spend. I think that's really where the massive unlock is. Yeah.
When we talk about unlocks, it is that element of, I think usability is one big element, or kind of the two-sided network effect. What else needs to be solved? Obviously, we've seen massive growth in the last few years in terms of stable coins, both from a TPV and as well as an AUC perspective. But I sometimes say, and it's a little flippant, but it's just kind of get people to listen, is to say, look, stable coins have grown as a massive, massive portion of the economy, despite in many senses this being a very, very difficult technology to leverage.
Yeah.
right?
Which I think kind of speaks to the true value in it, right? Because
Exactly.
like you have so many roadblocks in actually using them.
Exactly.
But the demand still finds a way.
Exactly. And I think that was what it proves the point, right? Is that despite the fact that there are these frictions that exist, it has grown exponentially. So as we solve these additional frictions, imagine what it unlocks in terms of market. Like I think we've really hit only the tip of the iceberg in terms of what's left. But when you break down what is left to say, okay, stable coins are, whether it be a TPV number or an AUC number, what leads to a 10x growth in the next 2-3 years or faster? Like what are the categories that need to be solved?
Sure. I think one of the biggest challenges definitely is kind of last mile, first and last mile. So on off ramp obviously is still the biggest, most complex challenge to solve. I think it's also kind of a user experience product thing, really, where if you study how kind of stablecoins at scale right now are actually used, you see how imperfect it is from like a user experience and product perspective, where people use Trust Wallet and Binance and a local exchange and cash exchange shops, and all of that is to an extent an artifact of like, I think that the demand has kind of outpaced the infrastructure build out in many places.
Yeah.
And that leads to these like really convoluted kind of weird entry and exit paths. And so I think really what no one has solved extremely well is really how do you make stablecoins a very tangible product that you can actually use every day, both for kind of the money at rest and for the money in velocity use case. And I mean, to a large extent, that is what we are working on at Plasma. And I don't think it's interesting because people always ask us like who's basically the direct comparable here, and who's kind of done this. And I think the very honest answer is no one. I don't think it would have been very attractive to do this 2 years ago because stablecoins were just too small of a market. And so it's this weird disconnect where you have this kind of massive multi-$100 billion market, but it's still kind of self-custody wallet, exchange here, local exchange there, unreliable infra. That really hasn't been solved. And I think solving that is incredibly valuable from a user perspective.
It's interesting because it would be great to get your sense in terms of do you believe in a multi-chain world? So, for example, for stablecoins, because we are an interoperability layer in many senses, and I think I get asked a lot from people. Well, what will be the operating system of the future? And I don't think there's going to be one. I think that it's all about interoperability in the same way that with any technological revolution. And I put out a tweet yesterday around different technological adoptions, both from email, from SMS. From now, different technologies at kind of a blockchain layer. But you're obviously building one very large blockchain.
Yes.
And it would be great to get your sense as to the key comparable points. Like what is your mission in terms of what you differentiate on, and then secondly, how does that intersect with like a multi-chain world? And I believe that in any environment, any real category, there are multiple category winners.
Yes. And
that is a good thing.
I fully agree.
Yeah. Can you maybe share a little bit more and unpack that?
Sure. So first of all, I actually do believe in a multi-chain world. I don't think there's going to be one blockchain to rule them all. I mean, I think email is a good comparable, right? I mean, Gmail probably has, I don't know what market share Gmail has, but it's probably quite large.
Yeah.
And that doesn't mean you don't have a lot of other email services that kind of use the same protocol in the end. I think really you do have multiple massive winners in this really. I mean, it's very, very nascent market, right? Yeah. And you have this really interesting situation right now where it's basically only Ethereum and Tron that really matter at scale for stablecoins. And I think that obviously meaningfully changes. I think you probably have more than just two winners in this.
Why have they historically been the two chains that matter the most? Like it's
a lot of
path
dependency.
A historian. Yeah. Can you maybe unpack that a little bit more? Because people that are entering the space today, they look at the market share and they say, okay, Ethereum and Tron for stablecoins.
Yeah.
And then maybe base a little bit more recently, potentially on USDC. But can you share like why have those players snapshot in time today and unpack that path dependency point? Because I think that's what people struggle to understand if they haven't been in the space for a long time.
No, it is also something we've spent a lot of time on. it's highly path dependent, obviously, right? Because I mean, those chains were kind of the leading chains when stablecoins really came to be in like the very late 2010s, early 2020s, and I don't think those was like I don't think the market has found efficiency on that yet, basically. Where I think we're still kind of in the Netscape era of stablecoins kind of really being usable, and so a lot of it is just kind of being the chains that are integrated in all of the venues when stablecoins really came to be, and being the only chains that really operated at scale during that time.
So it's technical distribution in terms of how distributed that underlying tech stack was.
Yes,
was a big thing.
Yes, I mean, it's also like you didn't really have many examples of anything else really having distribution to all of the venues, and so it was kind of the only option, and really was kind of for it to be those two chains. I do think that probably fragments more. I think the winner in this is going to be. I mean, interesting. Look, I build a blockchain, right? And so it's probably a somewhat controversial take for someone who's building a blockchain.
Yeah, that's why I'm interested.
I think block space itself is highly commodified and is becoming kind of more commodified as time goes on. I think fees compress to absolutely zero. I don't think anyone actually makes money on building a blockchain. I think that's impossible to monetize. Basically, no one has figured it out. Tron has to an extent, but that's a very long story. It involves a non-zero amount of crime, and so I don't think you can win on just saying, "Here's a chain. Good luck. I'll like go and sit on a beach now." I think that is like that is not a viable path towards winning. But I think what you really need to do is really kind of the entire product suite and actually interacting with that chain, and then kind of having a very deep stablecoin focused ecosystem, obviously, but it's really how tangible can you make using the infrastructure? Because in the end consumers do not care about infrastructure. No, absolutely no one cares. I'm sure this is kind of something you guys have spent a lot of time thinking about. For pay-ins and payouts, no one cares that they're using zero hash specifically. They want the best experience and the cheapest fees and just kind of the overall kind of best product. And that's why zero hash is winning and dominant. It's not because someone who deposits money to Kalshi doesn't demand, oh no, I need to use zero hash for that. It's just, it happens to be the best option because it's the best product. And we view Plasma in a very similar light, where it really needs to be, it needs to have value besides just being a chain. And very long and very convoluted answer on this, but this is kind of high level how we think about it.
And usability comes, and I agree with you. I think we probably use a more PR friendly term of technical abstraction, right? We abstract away that technical complexity. Customers don't care at the end of the day. And also, frankly, they shouldn't be making decisions when they're moving value across the world about what chain am I sending on, what chain do you want it on, which asset exactly do you want. But yeah, we believe in a world where there'll be many chains and many assets built on those chains. And so that leads to a complex world. And where we play is effectively abstracting away the complexity of doing so, just pure play technical abstraction. And then secondly is interoperability. I don't know how many chains you believe exist or how many stable coins exist, but if you just keep a very simple number, for example, 20 different, 100 different stable coins across 20 different chains, if that exists.
Yeah, but I mean, let's be real, like 4 of them matter, right?
Yeah, exactly. So I think, but that interoperability question, even if it's 4 by 4, it's still a relatively complex. Even more, if you believe in more than one chain, more than one asset, there is an interoperability question that certainly exists, and I 100%. Think that's where we sit. So when you look at, for example, the current landscape of blockchains, if somebody is thinking about, okay, how do I think about building on X blockchain, Y blockchain? What is the paradigm or the paradigm of viewing these pieces? I think one is obviously naturally distribution is one that clearly matters in a two-sided market, in a network game. But what else matters? Not even related to Plasma, just more generally, as somebody who focuses on this space, what is the quadrant of success? If I'm a big bank or I'm a big financial services institution, I say, how should I be looking at? There's so much noise in this space.
Yeah.
How do you cut through the noise?
Yeah, very good question. I think it's really two things that matter.
Mhm.
It's on one hand distribution network effects,
Yeah.
and on the other hand it's just liquidity and kind of real activity, because in the end you do need both, and they're obviously highly interconnected, and one leads to the other, but they're still kind of separate things, right? Where, I mean, yes, you have probably tens of thousands of chains, probably hundreds of thousands. I mean, you can deploy a chain in a weekend.
Yeah.
And so
Maybe you can,
well,
but yeah.
Conduit makes it very easy.
Yeah.
But I don't think that by itself has any value.
Mhm.
And so it's very much, especially if you then build use cases at scale.
Yeah.
You need a network that can handle that scale on one side.
Yeah.
And on the other hand, you obviously need the if you want to build a lending-based savings product, right? You need the actual kind of borrow lend liquidity to be there. And I think that matters massively, especially if you really want to kind of build both consumer and B2B use cases and do it at scale.
Yeah.
You can build really small things on literally every chain.
Yeah.
You can't, I mean, so Plasma, for example, has the second largest Aave instance now, right after Ethereum mainnet.
Yeah.
And so it's the second most liquid, second deepest lending market.
Mhm.
And to an extent, the Aave kind of supply rate for both USDT and USDC is kind of the crypto risk-free rate to an extent.
Yeah.
You can debate if it's actually risk-free, but it's treated as such. And that requires kind of massive scale of liquidity and depth. And that's irreplaceable if you really want to build things at scale.
Got it. So maybe to bucket it into kind of buzzwords, it would be distribution of network.
Yes.
It would be throughput and scalability. And then maybe the third bucket would be functionality. And then maybe fourthly, it would be effectively liquidity or kind of use cases of that underlying chain and how much infrastructure has actually been built on top.
100%.
Can you maybe unpack that lending element as well? Because I don't think people truly understand, they hear the word Aave, they hear Plasma. Can you talk about why are people using these tools? Like what is the unlock that gets existed? Real 101.
Sure. I mean, it's really permissionless access to credit. Mm-hmm. And I think that is a massive, I mean, it's the largest DeFi use case.
Yeah.
In both in my view and if you look at the data.
Yeah.
And because it obviously allows you to kind of over collateralized lend out assets and then generate yield on them in a very kind of programmatic and easy fashion where you can deposit, you can withdraw. It's fully permissionless. You don't need to speak to anyone. You can just click deposit. You can just click withdraw.
Yeah.
And that is massively valuable, right? And that's true both on the B2B side and on the consumer side. And I think you're now seeing massive institutional kind of uptake of those sorts of products. I mean, Aave just launched the Horizon market, which is kind of a KYC institutional only gated market, and that's close to $1 billion now, I think. So I think really those use cases only continue growing, and I think that is a massive unlock if you build anything that involves money at rest. Yeah,
super interesting. Yeah, I mean the lending market is so important because that effectively helps the GDP grow.
Yes,
right. I think it always ties back to, okay, why does velocity matter? Why does lending pools matter? Right, and fundamentally for the benefit of the world. And I think it's tying it back to, businesses get built.
Yes.
People are able to do things that they otherwise wouldn't through lending pools. So can you maybe talk a little bit more as well, because that's something that obviously Aave is one mechanism that's been built on Plasma. Other elements more broadly, obviously, we've announced several partnerships where we support Plasma, both from a native token perspective as well as on USDT. And now any one of our 100+ enterprises can easily enable that. And I think that's going to, our view is to lower the friction for our partners so that they can innovate on new technologies, including Plasma. So hopefully in a few weeks' time, you'll be able to talk a lot about, the use cases that we've helped unlock.
Yes.
But can you talk about other use cases? Aave's one, other applications? I know obviously you've got a very close relationship with Tether. Can you maybe talk about those pieces, just making it more tangible for people?
Sure, absolutely. I think that there's a very long list of kind of both consumer facing and more B2B oriented use cases that have been built and are being built. I mean, we work extremely closely with Yellow Card, for example, which is the largest stablecoin payments player in Africa.
Yeah.
And they're killing it and using Plasma to kill it now, which we're obviously very happy about. And we kind of try to support in any way we can. And I think really you have all of those really interesting. A lot of it is somewhat local because stablecoins are kind of local by design. We work with the largest Turkish lira stablecoin issuer. They're called 1 lira in Turkey, and they do a lot of kind of payment flow and they're a regulated on-off ramp, and we have a very close relationship with them, and they do all of the USDT on Plasma, and so. I think it's a very boring exercise now if I kind of go through the list of who I can think of. But
it's that network.
I think those two are kind of good examples of basically things that really kind of unlock really interesting markets and then also just kind of the existence of like a very distributed network. I think no one has actually, and this is a somewhat kind of counterintuitive and surprising thing. Crypto native exchanges still matter an incredible amount as kind of entryways and exit doors from just crypto native on-chain markets. Yeah. And no one really has a good network effect on being integrated with basically all of them, except Ethereum and Tron and now Plasma. I mean, that's something we've spent a lot of work on, where we work with Paribu and 1 lira in Turkey. We have the biggest kind of decentralized partnership with Binance, where we had $1 billion in user deposits that are on the Plasma chain through kind of the centralized Binance interface. And then I mean, there's countless examples of kind of Coins PH in the Philippines, massively dominant. BitCup, which has 90% market share in Thailand as an exchange, and is just dominating that local market. And we work with them very closely.
Yeah, I just think most people don't understand quite how distributed this technology actually is. You gave some great examples. And I think that's what, sometimes when you're based in the US, you think about, people don't appreciate quite how developed the technology is actually in other places around the world. I mean, obviously here we're seeing, I think with Genius, every bank will be able to access a stablecoin in the next 12 to 18 months. So you will have this omnipresence of blockchain technology. You obviously seen Cash App move into the space and others, but you kind of alluded to a number of global infrastructure that exists. And that's why when we talk about, for example, some of our products such as global payouts, which, for example, Gusto just enabled, they really understand that when they talk about their millions of freelancers and employees, they understand that these people actually have access to this technology through an existing account.
Yes.
PDAX is massively dominant in the Philippines. Exactly. And then they've built so much infrastructure around that. So, for example, if you receive USDT on Plasma, you can either hold it, effectively money at rest, or you can use it and spend it.
Yes.
And so I think the terminology of crypto exchanges, I think these crypto exchanges are increasingly becoming probably like some of the largest, you can call them fintechs in these regions. Like PDAX is a crypto platform, but they do a lot more.
And a lot of them are like extremely unknown and I think underexplored.
Unknown here.
Unknown here, right? But I mean, BitCup is doing billions of dollars in stablecoin flow. And they're incredibly dominant in Thailand. And like I can name you examples of like probably 30 countries where you have kind of one extremely dominant player. And sure, that probably consolidates over time and that probably gets kind of a bit less fragmented as time goes on. But the value you can create in being omnipresent in all of those venues, because in the end, this is about building a network, right? And someone in the US wants to send money to someone in Thailand, but they need BitCup to off-ramp. And so you need to be integrated with BitCup.
I agree. I think that's the way I increasingly think about it, is that it's incredibly important around the geographical world to go incredibly deep, right? BitCup has to offer every type of service that a customer wants, right? Because the reality is that, yes, they may be able to spend USDT, but at some point they may need to pay somebody in the local currency. They actually want to use existing infrastructure. Yes. So these groups like PDAX, BitCup, and others that maybe have started in more traditional financial services companies like Revolut have now gone super deep in terms of offering a true financial services for that local region. Effectively, what blockchains like Plasma do is they provide this communication layer across all these
Yes.
very, very deep infrastructure. So it does allow for these global dominant players to be interconnected within seconds. And that is, I think, the powerful
100%.
use case.
Yeah.
Yeah. And I think that is really the unlock that I think most people don't fully appreciate yet, that the network unlock that has actually existed is huge. And now we're lighting up the connectivity tissue amongst these kind of huge places.
It's massive.
Absolutely. I mean, I'm curious because every time I talk to you, you're somewhere else in the world. Like, do you think of the world through geographical focuses at all? Because I'm just curious from your perspective, because you mentioned regions that maybe a lot of people don't necessarily think about every single day, but you've spent a lot of time in these regions. Like, how do you think about geographical focus? For example, Tether historically, for example, said, look, very much non-US. And then obviously that shifted now as well, where the US is obviously a big focus.
Mm-hmm.
How do you personally think about geographical focus?
Sure. It's a difficult question to answer because it's a very kind of fluid kind of game field you're looking at, basically. I think there's a couple of key jurisdictions that are incredibly interesting. I think Turkey is one of them.
Yeah.
I think Southeast Asia kind of broadly, but specifically kind of Philippines, Thailand, Singapore as kind of being a lot of kind of in and outflow. There's a couple of kind of key jurisdictions where I think you want to really spend time in how do we find kind of the best entry exit gateways here, so we can partner with them incredibly closely. Yeah. And I think you're fully right. You want to go deep in all of the places that matter. The US does matter, obviously, right? Especially on the remittance flow side of things, where so much of the global remittance market just originates in the US. Yeah. And so even if like most of the remittances that end up in Thailand, Singapore, Philippines, a lot of that just originates in the US. And that also means you also want to be closely aligned with kind of the large US players. And that's something we've spent a lot of time on.
No, I think what would be interesting as well is often blockchains, they kind of sometimes put the people working on the blockchains, they're not so public, right? But I think what's great about your team is just the breadth of experience. Can you maybe just talk more about how you've put the team together, some of the experience? Because I think that really helps people understand kind of the mindset in which you're building Plasma.
Sure. I mean, I don't think anyone has ever won anything in any market without kind of having a fantastic and diverse and kind of basically highly skilled and skilled at very different things team. And so I think that's always the core premise. And we've been fortunate enough to kind of hire a lot of kind of incredibly experienced and people both from the TradFi side of things, from the crypto payment side of things, from who've basically spent their entire careers kind of thinking about those problems. Yeah. Maybe not even in a stablecoin context, but just in a global payments, euro, dollar, USD flows globally sort of way. And that's benefited us immensely to just kind of have that experience on the team and really also then local experience obviously matters a lot, but we kind of increasingly now are kind of hiring people who actually go on the ground and then spend full time in the places we really want to be focused at, because that's really tough to replace, right? And I'm never going to understand Turkey as deeply as a market. Kind of living in London, Germany, I've been to Turkey, but like I don't live there, and like I don't live and breathe that market. But you do need someone on the team who does that. Yeah. And I think that's true for like all of the places you really want to kind of go extremely deep on. Yeah,
I think that's what people also don't fully appreciate sometimes, that blockchains are living and breathing organisms, right?
Yes.
They change. And so as the product demand shifts, evolves, there's feedback, there's usability.
100%.
You mentioned, for example, a number of production areas whereby there's huge volumes today. Plasma is able to innovate from an actual technological perspective to unlock new use cases or expand existing use cases. And I think people don't fully appreciate that this isn't something that's static.
No, it's never going to be. I mean, I think like it's interesting. I think a lot of blockchain launches, what actually happens is like a lot of the work ends up being extremely front loaded. I think for us, it's actually kind of uniquely, I think the majority of the work and the majority of the things we need to get right is what happens in the next couple of years, really. And you can't like, I'm incredibly proud of the team, and we've built a fantastic chain, and it's been great. But we do have a lot of things to kind of build out around and on top of that, as I kind of like really the productization of stablecoins is really what's missing in my view on a global scale. And so the product work kind of starts now to an extent.
What you mentioned kind of the next few years. What is maybe metrics for success for you, but maybe just more generally, what does the next 18 months look like? I mean, we've seen the velocity in the last 18 months. I think we all underestimate quite how much will be achieved in the next 18 months, frankly. But
I fully agree. Yeah,
it'd be great to kind of get your sense of, I hate making predictions in this space because you're always wrong by a factor of multiples. But can you maybe share some metrics for success? What do you think about? And more macro, what does the space look like in 18, 24 months?
I think it professionalizes quite a bit. I think you do have like a lot of these kind of opaque systems, I think kind of just grow up to kind of really be payment products in the end, and kind of less just in entryways to casinos. I think that is really a massive unlock, and you're kind of starting to see this now. And I mean, for us, success very much looks like, on one hand, really kind of monetizing that productization of stablecoins. I think that is something that we need to get right and prove that we can get that right. I think really that is the kind of biggest and it's a very kind of unspecific goal to set. I mean, we have incredibly specific goals, but that is kind of the PR shareable, like we need to productize stablecoins at global scale and really have them in the hands of millions of people who can really basically run their entire financial lives on stablecoin rails. That is the metric for success for us.
That's helpful. Well, it's great working with you, and super excited to continue building.
Same on our end.
Thank you.
Thank you, Edward.